Guys, right now it seems we're in quite a scary environment at the moment. And the reason why we're in such a scary environment is because if you look at gold, gold is going absolutely parabolic. As you can see, it's pretty much behaving like, if you want to call it like a shitcoin, if you want to call it that. It actually hit a market cap of about $30 trillion overnight, and it makes it the first asset ever to hit a $30 trillion market cap. And if you look at gold's returns this year, you've pretty much got gold now giving investors a 63 or 64% return this year. And to make matters worse, what we're seeing is an environment where people are pretty much running into physical gold and want to get into physical gold. You can see it over here. This is in Vietnam. You can see it here in Hong Kong when you look at the IFC Mall right now. You can see it here in Sydney. 𝗖𝗁𝗏 a Sydney queues up to buy gold. This was on Wednesday. You can see it here. There's some more gold dealerships going on. And so what you're realizing is that the market is very scared, right? The market is absolutely petrified. And it's not only in the gold price that you can see that the market is absolutely petrified. You can see that the market is also petrified when you look at the VIX. The VIX is what they call the volatility index. And the volatility index indicates when traditional markets are getting pretty scared. And as you can see, the volatility index has almost doubled in the last week. So if you look at the last week, you've got the volatility index, the VIX, going from 15 and hit a high of 29, which is almost double on the volatility index. At the same time, you've got the traditional markets in extreme fear conditions. You have crypto in extreme fear conditions over here, as you can see back at 22. You have altcoins getting absolutely wrecked, and you got Bitcoin and the NASDAQ going down a whole lot. I think the last time that I looked at Bitcoin, it was trading at 107,000. I think what we need to look at today is why gold is spiking and why this is such a terrifying situation and what we actually need to do about it. Because this is not a normal situation. It's not normal for the safe haven asset of the world to be going parabolic and behaving like an absolute shitcoin. So I think we need to look at why this is all happening, and we need to make some really informed decisions as to whether or not we should be scared. And I think to do that, what we need to do is we need to look at the reasons why investors are scared at the moment. And that's what I want to do in this video. So guys, as you can see, it's an unscheduled stream. It's coming to you on our Crypto Insider channel, which is our new channel. This is where we break down much longer term things. The live shows we're going to carry on doing on Banter every day, but you know, sometimes we want to come to you live, and there's no space in the main channel. And also we want to take some time to explain concepts a lot slower and a lot broader than we can do on the main channel. So if you're not already subscribed to this channel, subscribe to Crypto Insider. It is the channel where you'll see a lot more of me and where I'll bring you a lot more timeless, educational, and much more informative videos. And if you are a subscriber, well, welcome back, and just obliterate the like button, and let's get moving and talking about what's actually going on and why investors are absolutely scared and why gold is going parabolic like it's currently going. So let's look at the first reason why investors are scared and why gold is going parabolic. And that reason, I think, is probably attributable to the government shutdown, right? So the government shutdown was the US government shutdown was a big nothing burger until the cracks started to show, because the government shutdown has lasted for a lot longer than people anticipated the government shutdown will last. And right now, as it stands, there's not many people that think that the government shutdown is ending very soon. There's a 1% chance that it's going to end between the 15th and the 18th of October, 4% chance that it ends between the 19th and 22nd of October. And so the number goes up, and you can see that the biggest probability is that this government shutdown doesn't end before November 16th. Now, it was all cool when the government shutdown was short, but now the cracks are starting to show, and I'll show you some of the cracks later on, and investors are starting to get really nervous. The investors are starting to say, hold on a second, if the government employees aren't coming back to work, not only are we not getting data, certain payments aren't getting made. You'll see in a second what that's doing to the regional banks. This is becoming a very scary situation. And so I think the first reason why people are flocking into gold and why people are getting scared is because of the government shutdown. Now remember that gold is a safe haven asset. Gold is where people go when they're scared of governments, when they're scared of collapses, right? And if you look at previous gold charts, what you can see is that gold usually tops or usually goes up when there are crises on the horizon. So when there are crises. So here, this increase in the gold price was when the dot-com bubble collapsed and people didn't trust markets and stuff like that. This is the COVID-19 bubble, and this is what we're currently living through now. So you kind of got to ask yourself, why is it, or what is around the corner? What do investors see around the corner? What is this thing that is currently broken? And we'll talk about that in a second. So the first reason, as I mentioned, why I think investors are currently scared is because of the government shutdown. Short shutdown is what they expected. They're getting a long shutdown, and the cracks are actually starting to show. The second reason for the correction is what we're going to call the debasement trade. Now, for those of you who don't know what currency debasement is when governments print more money because they have to pay debt, and they print more money because they can print more money. And by doing that, they make the current currency worth a whole lot less, right? That's a very standard technique that governments use, because when they can't pay back their debt, what they do is they devalue their currency. So let's say that you've got a big debt to pay and your currency is very strong, right? Then it's hard to pay that debt because the currency is very strong. But if the currency weakens, and let's say that $1 today becomes worth the same as $2 tomorrow, right? So in other words, the currency weakens by half. It means that it's about half as easy or twice as easy to pay that debt. And so what countries do, specifically countries that have got high debt, is they devalue their currencies. So you can see that the US is one of those countries. And whereas the dollar has traditionally been the safe haven asset, what you can see is that right now the market's saying, hold on a second, the US actually has $38 trillion of national debt. How are they going to pay this national trade back? And so investors are starting to protect themselves from the threats of this debasement trade. And what they're doing is they're saying, look, we don't want to be holding sovereign debt anymore. We'd rather be getting into precious metals and cryptocurrencies. Now, this is not a new thing. It's been happening for a couple of years, and that's why gold has actually been going up for a couple of years. And actually, in some cases, it's intentional, because remember, if a country has a weak currency, then things in that country seem cheaper to other people, which means that they can export more, right? Which means that they can have more tourism, which means that they can sell more oil. And the problem is that when they want to buy something from other economies, that's when the cracks actually start to show. And for some countries, a debasement of a currency is actually part of their strategy, including for the US. You can hear what Donald Trump actually said about it.
I went to Japan and worked, so I know this.
You understand?
Absolutely.
Oh, you did go to
I went to work, yes,
well,
sir.
that means you're a smarter guy than I even thought, and I know you're smart. So when we have a strong dollar, one thing happens. It sounds good. But you don't have any tourism, you can't sell tractors, you can't sell trucks, you can't sell anything. It is good for inflation. That's about it. And we have no inflation. We've wiped out inflation. But it's an interesting question. So I will never say I like a low currency, but you remember the battles I had with the yuan, with China and with Japan.
So what you can see is that sometimes part of the country's strategy is to actually weaken their currency. Now, Donald Trump has a history of weakening the dollar. If you look at the last time that Donald Trump was actually in power, what you can see is that he came into power. I'll go take you to the weekly chart, and that will make it very simple for us to look at. Let's just fix that chart over there for you guys. So if you look at when Donald Trump came into power in 2016 over here, look at what happened to the dollar. The dollar weakened a hell of a lot. In fact, if you want the exact number, this is, I think, the date that he was inaugurated, and then the dollar fell by 15%. If you look at what's happened since Donald Trump came into power in 2020, there, you can see that the dollar is down about 11%. So for Trump, debasing of the currency is actually part of his strategy because it makes America more competitive. The only problem is that it's not only Trump that is devaluing the currency. We've now got to a point where most countries are starting to devalue their currency because it's a never-ending cycle. They have a lot of debt. They carry on spending. They take more debt to spend. And in order to pay that debt, instead of becoming more productive, which is very, 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 very hard, what they do is they devalue their currency. And so right now we're in a situation where every country is pivoting to running hot. And it's not, you can see that like countries like Japan, they've got a new Japanese prime minister or a potential new Japanese prime minister that's going to be coming into power. And her platform is that she wants tax cuts and cash payouts, which sounds like stimulus. What does stimulus do? It prints more money. And when you have more money in the economy, but you have a fixed number of assets, It makes the assets more valuable relative to the money. And that effectively means that you are devaluing your currency. And they call this the debasement trade, right? So you've got everyone right now in this debasement trade, and all countries are basically devaluing their currency. And so what users are doing, or what investors are doing, is they're running away from currencies like the 𝗥𝗍, like the Japanese yen. They're running away from these currencies, and they are going into gold. And so this spike over here is probably a lot in response to the fact that governments are devaluing their currencies. How do they devalue their currencies? Well, they print more money, number one. They do things like stimulus, but also they can reduce things like interest rates or stop quantitative tightening and put that into the economy. And that's exactly what the US is doing right now. And why the market is so scared is because if you look at the market said that, or Powell started reducing rates, and he says that the end of balance sheet drawdown process may be nearing, right? In other words, the end of quantitative tightening is upon us. And at the same time, you've got inflation of 3%. Now, that's not a normal situation. Like, if you have an inflation target of 2% and you're above your inflation target, you're at 3%, there's no reason why you should be doing rate cuts and quantitative tightening. And so that's worrying the market right now, because the market's kind of saying, look, we don't trust this government debasement of the currency trade. They're printing more money. They're loosening economic conditions, right? And at the same time, so they're loosening economic conditions. They're debasing their currency, and we want to be out of that. And that's why investors are basically running into gold and other safe haven assets. The next reason, so the first reason why people are scared is the government shutdown. The next reason is what we call the debasement trade. The third reason why people are worried is because what this government shutdown has done is it started to show cracks in the banking system, right? So because the government is on shutdown currently and no one knows when they're going to start coming back, what we started to see yesterday was that the regional banks in the United States are basically starting to collapse. We saw massive banks actually starting to collapse. Yes, granted, there are regional banks, but they're the biggest of the regional banks. Now, the question is, why are these regional banks collapsing? I don't know if you remember, but in March 2023, we had a regional bank collapse. But what the government did was they contained the problem. And how did they contain the problem? Well, they just gave banks a larger credit line, and they kind of said, look, we will backstop the banks if the banks start going down. And so by the Treasury and the Fed mainly the Treasury, giving the banks a shutdown, a backstop, investors kind of said, okay, well, the banks can't collapse because the government is going to keep subsidizing the banks. And that's exactly what happened. The only problem is that now the government is on shutdown. And normally, the government gives weekly government payments to provide a temporary cushion through float as customer deposits. In other words, the central bank provides the regional banks with a cushion. The problem is that now the US government is on shutdown, and those inflows aren't coming into the banks. And so no one is shielding the banks. And as a result of no one shielding the banks are actually being forced to sell assets. And that's reflecting very, very, very badly on the bank. Imagine that you're a bank, and the problem is that your customer assets don't match your customer liabilities. Usually the central bank or the Treasury would help you in that situation. Problem is they're on shutdown at the moment. And so what it feels like is the Democrats are actually playing a game here, because they know that what's going to hurt Trump is a bad market. And the longer they can keep the government shut down, the more that the economy will suffer. And the cracks are starting to show in the regional bank collapse. These problems have actually always been in the banking system, right? These are not new problems. The fraud problem, the delinquencies problem that's happening in the United States, those have always been there. The problem is that they've been sheltered because the central bank has been helping the regional banks. However, now the bank is on the government's on shutdown, and it's not happening. And what Heinrich says, he says, expect challenges in US regional banks soon. If regional banks have troubles, the US economy is in trouble. This is bad. But it may trigger some kind of announcement from the Fed, which sends risk assets soaring. And that's the same thing that 𝗤𝗏cie says. So if we are getting a regional bank collapse, the only way that you can stop a regional bank from collapsing is by giving the regional banks more money. And when you give the regional banks more money, you basically put more money into circulation. and more money in circulation means higher risk asset prices. So generally, just before risk assets go up and start flying, what you get is you get a little bit of a dip. So when you look at things like the COVID dip and whatever else, what you see is that first the precious metal went down, then we went back up. And why did that happen? Because first we wait for something to break. And then when something breaks and everybody's panicking, the Fed starts to print money to try and fix the situation. And so this government shutdown may actually be quite a good thing. And we'll talk about that in a couple of secs, because it actually matches up with the rest of my thesis. The last reason why I think that people are very, very, very scared at the moment is because of the trade war. And I know that a lot of people say, well, we're not actually in a trade war, but let's just call a spade a spade. The first thing is that Trump came out and he said that China's taken a very, very hard approach against the US as it related to the rare earth metals. And then Trump came out and he basically said, look, we are in a trade war with China. So anyone who says we're not in a trade war, Trump basically came out and he clarified. And this is what he said.
Are we in for a sustained trade war with China?
Well, you're in one now. Look, we have 100% tariff. If we didn't have tariffs, we would be exposed as being a nothing. We would have no defense.
So what you can see is that basically you've got Trump here, and Trump's basically saying that sorry, let me get my screen back. That Trump's basically saying, look, we are actually in a trade war with China at the moment. That's pretty much where we are at the moment. And so this trade war is starting to tighten. Now remember that in 2 weeks, Trump goes to meet President Xi in China. And when he goes to meet President Xi, I don't know what's happening to my screen. Let me get my screen back. So when Trump goes back and goes to meet President Xi, they're going to negotiate. And before the negotiation, I think both sides have got a posture before the negotiation. And China knows, just like the Democrats know, China knows that Trump measures himself based on the strength of the economy, right? And so what they're doing is they're trying to hit him in his weakness, in his weakest spot. You can see here, they know something crucial about Trump. He personally measures his presidency success by how high the stock market is. Every time the S&P hits a new all-time high, Trump sees it as proof that his policies are winning. And China knows this better than anyone. So what are they doing? They're delaying negotiation, stretching talks, and creating uncertainty, because they know one thing: uncertainty hurts markets, and that's exactly what they're playing. What they're playing right now. Both sides are posturing ahead of the negotiations that are supposed to happen in 2 weeks, and that's scaring the markets. And on top of that, what the central banks are doing, and specifically China central banks doing, is they buying more and more gold. And so that's the reason why when we look at the markets today, we have people scared, and we have people going out and buying more and more gold, and that's why gold is trading like an absolute altcoin, or an absolute shitcoin. You're not supposed to see the world's reserve asset going up parabolically like that, and when you do, you know that that's basically a sign of danger. And it's not only China that's actually storing gold. It's most central banks. And in fact, they're talking about gold being 1/5 of the world reserves at the moment. And you can basically see that in the gold chart. And it's not only gold, because just like when Bitcoin goes up, ETH goes up, what you can see is that silver's broken a 50-year cup and handle. So this is spreading very, very, very much to all commodities. And as Peter Schiff shares, it says, as US stock investors brace for a replay of the 2008 financial crisis, with the regional banks tanking due to losses tied to loose lending standards and a weakening economy, the bigger risk is the dollar crisis that sends consumer prices and long-term interest rates soaring. And so I think that's the big thing here. Ultimately, every single one of these risks ends with more printing of money and more debasement of fiat currency. And if you want to be in a trade that is insulated from currency devaluation, you need to be in a scarce and limited asset. And up until now, gold's been that asset. The problem is that if you look at gold right now, gold has gone absolutely parabolic. I mean, just look at the gold chart, and that's the RSIs over there. Let me try and just make it a bit more visible for the guys who are looking at a thing. If you look at the gold RSI, what you can see is that as gold is spiking, the gold RSI, which measures the sentiment in gold, has gone up to one of the highest levels, in fact, probably the highest level that I've ever seen, or at least since since the 1960s and 1970s. That's how overextended the gold trade is. Now, anyone who's an experienced trader will tell you the following, right? They'll tell you that when you get a parabolic run in an asset, and when you get people, the RSI at that level, and when you get people lining up in the street to buy NFTs or meme coins or Pokemons or whatever it is, except this time it's gold, then that is usually a top. And so what it feels like to me is it feels like gold is starting to top. I think that it may not top today or tomorrow, but I'm certainly think there's more downside risk than there is upside risk, more upside risk than downside risk on gold. However, if you analyze the gold chart and you say, what happens, when does Bitcoin generally start running? Generally, Bitcoin starts running after gold is topped. So if you look at any cycle, and I'm showing you one or two of the cycles now, generally gold tops, and only when gold starts to consolidate and maybe go slightly down, do we get a 6x in Bitcoin and a 10x. And the same thing happened over here. Gold topped, gold started to consolidate. So the top in gold is actually quite a positive thing, if you ask me. On top of that, I want to show you something else, right? One of the things that I said to you guys, and I've stuck to my thesis right through the whole correction, is I said to you guys, and I know you guys didn't want to hear it, but I kept saying to you guys that my thesis for this correction is that what's going to happen is we're going to take out the lows. So I kept saying to you guys, don't buy, don't buy, don't buy. Why? Because what we want to do is we want to wait for Bitcoin to, like every correction, to go back and to test the lows, right? So if you look at a daily chart and you look at the lows, what you realize is that every time that we've had a correction, we've had the correction, we've had the correction, and then we've gone down and we've gone up and then we've gone back down and we've swept the lows. I think this time will be no difference. And what you can see is that right now we went down and now we're almost back at sweeping the lows. At the same time, I always said to you guys that the only time that I'd be deploying cash in this market is if we actually hit extreme fear in the market. Coincidentally, on the day where we start taking out the lows or heading towards taking out the range lows, I mean, just look how close we got over here. Like the wick lows were 102, and here we got to 103, 357. On the day when we're taking out the lows, the indicator hits extreme fear. Now, what do I know about extreme fear is that when I look at extreme fear in bull markets, when we get to extreme fear, the market doesn't, in a bull market, the market doesn't usually stay extremely fearful for a long period of time. Usually it's between 7 and 14 days that we remain in extreme fear before we get out of extreme fear. And that usually means that if you have the same thesis as I have, that you should be jumping into markets when there's extreme fear, you've probably got between 7 and 14 days to be buying from this opportunity. Everything seems to have come together all at once. The gold price, in my opinion, seems to have topped. I may be wrong and I may eat my words. And the RSIs can remain elevated for quite a long time. But ultimately, I've got to take a thesis. And my thesis is the following. Gold seems to have topped. The better risk return play is Bitcoin. If I look at Bitcoin in terms of all the other cycles, as soon as gold's topped and people have got the majority of their returns from gold, that's when Bitcoin starts to have its parabolic run. Also, the indicator that tells me when to buy is the fear and greed index. And the fear and greed index is now telling me that the market's in extreme fear. That gives me my buy signal. That gives me my buy signal again. And so that's the thesis. The thesis is that everybody's panicking right now. And what they're doing is they're buying gold. I told you the 4 reasons why they're buying gold. The first one is because of the government shutdown, and that's starting to get a little bit uncomfortable. The second one is because of the debasement trade, and that's because every currency is starting to debase against every other currency and against traditional assets. Then you've got the trade war between between China and the US, and then you've got the regional banks starting to show cracks because of the government shutdown. But all of these things are creating the perfect bottom for Bitcoin. Now, I know you guys didn't like this when I tweeted it, and I said, look, my base case remains my base case. I said on the 26th of September, when the markets were very, very high, I said, the correction will end when we're all convinced that the end of the bull market is here, and that it lined up exactly like the previous cycles. And that remains my base case. My base case remains that we're going to go down to about 102,000, to be honest, and then we're going to start moving back up again. And so we're pretty much very, very, very close to the buy zones. And so I wanted to bring you this because I know that most people are watching the gold trade right now and they don't know what the gold trade means. I hope that I've helped you and that I've broken up the gold trade for you. And now you understand a lot more why gold is going back up, and also why I think that it's pretty much the end of the gold trade and time for a rotation into a new trade. If you enjoyed the video, subscribe to the channel if you're not already subscribed. And maybe what you should do is just, if you can, just like the video. It does help us get a lot more distribution. I'll be back here bringing you more crypto love and more crypto wisdom next week. Until then, trade well, my friends.